Global Emerging Market Strategy at UBS, and Kathleen Gingold of Kartika join in. Thank you to both of you for being with us on CNBC TV 18. Kathleen, let me start with you. The global setup looks like it's a Goldilocks scenario now with, that Fed rate hike out of the way and most global markets in risk-on mode. But how did you read into the event that took place overnight, and what would your own view be on the markets going ahead? Kathleen, is my voice reaching you?
Yes, I'm here.
Go ahead.
Good morning to you. Thank you for having me on the show. So you definitely, I mean, the Fed is guiding for a gradual hiking cycle, and Yellen was dovish, at least based on compared to what the market expected and based on the market reaction post the conference. And we tend to look a little bit beyond the next few days in our outlook and the way we invest. But even on that sort of longer term basis, we're quite constructive about emerging markets. And number one, we think the global economy is the fundamentals of the global economy are pointing to a very gradual hiking cycle, especially in a historical context. And the growth is improving both in emerging markets and developed markets. So we think that with the gradual cycle, this growth momentum will allow EM to outperform and overweigh the higher interest rates headwind.
Yeah, Kathleen, of course, that growth momentum, we could smell it even yesterday in the sharp rise we saw in Indian exports. After meandering for so long now, we saw a 17% rise in Indian exports in February. But I'll come to that in a bit. Let me welcome Jeffrey Dennis into this conversation. Good evening to you, Jeff, and thank you for staying up for us. What's your sense? What should an emerging market investor like you take away from Yellen speak?
Oh, I think the previous speaker was absolutely right. This is an excellent scenario for emerging markets. We did not get the acceleration of the rate increases that people feared could happen from the Fed meeting, 3 this year, 3 probably next year. I think that's telling you the Fed wants to raise rates, but it's a little nervous about raising too rapidly. We're still waiting to see some of the data, some of the sentiment data coming through to the actual hard data. And I think this sort of Goldilocks, as you said at the beginning, is extremely good for EM because it really allows the higher carry that's available in certain emerging markets to perform. And we think this is a pretty good piece of news.
Jeffrey, good morning. So in that case, what kind of rally do you think we can see in emerging markets? Do you think we could have a phase where emerging markets make a bit of a mockery of near-term valuations?
Well, yes. I mean, the most recent thing we wrote about, the levels of the markets was when markets were just pulling back. A week or two ago, we felt the pullback was going to be relatively minor. And what we've done with today, in particular this morning, of course, in Asia, we've taken out the high for the year, so we're moving up quite smartly. We would not be, wouldn't be wildly bullish because I do think you do have to be concerned about valuations, which are a little bit stretched, although EM is not particularly stretched against the developed markets. I think also the thing to watch from the U.S. side, and therefore with respect to the Fed, is are we going to get any pickup in wage inflation? Because if the wage inflation starts to pick up, then there would be a danger of the Fed moving a little bit more rapidly. But as of today, this was pretty good news, and I think it pushes us higher for a while.
Okay. Well, let me get Kathleen yet again into this. Kathleen, both of you, Jeffrey and you, sound positive on global economy this year. But if you looked at the crude and metal commodity prices, we saw them rallying, but that rally came to a kind of a resistance over the past 3 or 4 weeks. Should we therefore have questions that the global growth is not as robust as originally expected?
I would have said yes up until Tuesday, but in that context, I think the more important news for emerging markets even more so than the dovish Fed, is the very strong economic data that came out of China on Tuesday. And that made me much more comfortable, at least the near and medium term outlook for the market and for emerging market equities. Okay. I think the market in general expected a gradual slowdown in China, but the reflation that started back in 2016 seem to be still going, and in fact, the economy seemed to be accelerating in the early months of 2017. So that's definitely very positive. And surprisingly, the housing market in China is doing very well. And I think that will keep the momentum, the economic growth momentum going, and help the EM world.
Caitlin, I'm most interested to hear your view on the Indian markets, because when we spoke last, which was at the time of the budget, you had indicated that you would be pleased if the government sticks to its fiscal consolidation roadmap and stays away from populist measures. Has the government met your expectations? And with the recent win in Uttar Pradesh, do you think that the case for putting more money into the Indian markets becomes stronger from your end?
Yeah, India is definitely one of our favored, if not the most favored markets in the global EM context. In terms of the budget, I would say that the government definitely met my expectations, but I would note that I'm also glad to see that they slowed somewhat the pace of consolidation, fiscal consolidation. And I think that will be one triggers going forward, at least the near medium term, that would help the economy, especially the rural consumption.
Okay. Actually, same question to you, Jeff. What's your outlook on India now that valuations, some would argue, are tending towards the higher average of the last 10 years? I mean, we're closing in on 18 times, depending on what growth you give next year.
Yes, I mean, certainly that is true. I'd just like to, if I could, just fit in also, the previous question that you asked, Catherine, because we're not wildly bullish about the global economy. We actually think that the reflation trade is still somewhat doubtful. We're not, as I say, overly optimistic. And that is one reason why we think EM does very well, because we think EM does very well in this environment where the Fed is going to have to move slowly. I think if the global economy were to pick up more rapidly, I think that could be more of a challenge to EM, because that would mean a more aggressive Fed and a higher bond yield. So this is why the Goldilocks works so well. With respect to India, India is a little expensive, and it's above actually our strategist year-end targets. The way I look at it is that this is across emerging markets as a whole, and I've said this to you many times on the program, I know, we just think this is one of the best growth stories there. And with the sort of green light you got from the Uttar Pradesh election on the political side, we think this is also a positive for the market. And so although we worry a little bit about valuations, I think this remains a very good long-term story.
Okay. Caitlin, the other point is that we've already seen a 15% rally in Indian market this year. Even the emerging market index, the MSCI emerging market index is up 9%. Do you think in the near term, we could be looking at a scenario where things get overheated and that leads to a bit of a correction?
Yeah, I mean, look, there is always, we don't really try to forecast the market in the near term. Our investment horizon tends to be beyond 2 years, 1-2 years at least. So there is, of course, technically there could be some correction. I could probably list a few reasons why the market could correct. One would be technically it looks, very overheated, and the euphoria is definitely very high. But if I look at the 1 year, 2 year perspective in India, this is a market where we find companies, and that's not the entire market, of course, but we are very selective in our stock picking, but where we find companies that deliver and give us 20% plus earnings growth. That is very unique. And yes, you're paying a bit higher price for these companies, but I think in today's world where growth is lacking everywhere, finding companies which can consistently deliver such earnings growth while creating shareholders value, I think that's a price to be paid, and we are happy with our exposure in India.
Okay. Well, in that case, what are those islands of 20% plus? I mean, if you can speak stocks or sectors, Catalin.
I certainly cannot speak about stocks, unfortunately, but we have investments, consumer-facing sectors. We tend to focus on sectors that are driven by domestic factors and the domestic economy because, to Jeff's point, while short, medium term, the outlook looks good for global growth, we are not overly bullish in terms of the structural growth and the big V-shaped recovery. Okay. So we definitely try to stick to markets and companies that are more exposed to secular growth stories and domestically driven growth stories. So within India, we have consumer companies that benefit from premiumization, for example. That's a big theme that's happening not only in India, but in other emerging markets as well. You know, whereas the consumer being more educated, going for products that give them, you know, a premium, and that space is a very interesting secular story for us.
Okay, Jeff and Catalin, thank you so much for joining us and giving us your view. That seems to be a unanimous view that it is going to be good going for the emerging markets here on because of the Goldilocks scenario that we've seen in the global markets. But we have many more wise experts